What's up, traders? Hope you had a good week. I was doing a little bit of weekend research, and stock that a member of my Discord has been following very closely, trying to get long, is PayPal. And I've naturally been watching it because I like to hear other people's ideas, and I tend to start watching what they're watching to see if I can do things and execute them my way. And so I've been watching this for the last few weeks because it's come to an interesting level. The level starts, like most things, from the COVID low. That's where this trend really began, back in the COVID low and all the way up to the 2021 highs. And so, if we define that trend, it comes to the level I like, which is a 50% retracement here. And price has been flirting around with it the last couple of weeks. If you would have had an alert here, it would have keyed you in to come look at it. And now what I'd like to do is set up for a low risk entry, but still play the higher reward of the weekly time frame. I'm going to show you how to do that. One caveat, this week's price action came up with a little blip to test it again. That could be a hold, but if we want to get long the stock, we're going to talk about how to do it with low risk. So here's the price action that I like on the swing trading timeframes, which I'm going to define as the 30 minutes, the 1 hour, whatever time frame in that range that lets you look at a lot of the intraday price action. So going back to the 30th of November and the beginning of December, you see a lot of bottom holding here. A lot of people may call this an inverse head and shoulders. What I like about it is the fact that price sells off and then comes back up, especially when you have a spike like here. And then this December the 6th, I like that kind of open right there, that kind of a wick. I guess you call that a hammer. And then you have a little trend off of that this week, which then pulled back as the week went on. And so what I like about this is this sign of buying down here. So potential reversal. But then also, if we're going to look at it another way, if we're going to define our risk on a potential trade, I'm going to bring up Ichimoku here. And what I like about Ichimoku is that we can, give me my cursor, we can look at this from the same perspective that I like. Ichimoku is, of course, based on 50% retracements. So within this recent week's price action, it's come back from its trend off those lows and started to hesitate here into the last day of the week. Now from here, what we'd want to see this do is hold this halfway point, this 50%, to go back up and retest the high. The problem for this trade, if we took it as such, would be if we get into this no man's land right here, because then we're probably just going to retest those lows. So we don't want that. Okay, so we don't want it coming down into the 180 area. And from there, what we can say is that that's what's going to be our risk in this 180 area. We'll talk about maybe going below these lows here in just a minute. But in general, this is how you could potentially start a trade, looking for just to retest that high with your risk below the lows, as tight as you want to get it, but just not getting into this area next week. Let's go back up to the weekly, and let's clean things up a little bit. So if we look at it from here, we don't quite need Ichimoku on this level. We can still play this for the weekly reward. We can either play it for a halfway point of the move down, or we can play it for potential retest of the highs. And this could take a while because it's, of course, a weekly chart. But you see, if we're able to get in with this much risk, we can have a very nice high reward, very good risk-reward ratio. Maybe still you want to give it a little more. You want to say, okay, I've got those signs of reversals, but yeah, you know what? I'm going to let it not break that low. If it breaks that low, I'm out. You can still come in with a very good risk reward. So what we've done is we've looked at the lower time frame for a reversal pattern on the short term, but we're keeping in mind the higher time frame. So this is an example of multi-time frame analysis. We're able to potentially get into a long-term position with the weekly reward in mind, but with the intraday swing trading risk. That's really what you want to look for. So this is just an opinion. If you're looking to get long, we'll see what happens to it next week. Hope this gives you guys good ideas, and you have a great weekend. Remember, do your homework. Trade wisely.